Investors are closely watching gross domestic product for the fourth quarter, but so far, two closely watched economic models are forecasting dim news. The New York Fed's nowcast lowering its forecast for the fourth quarter GDP to just 0.4% growth, and the Atlanta Fed's GDP Now model predicting growth at 0.3%. That's a sharp drop from its 1% forecast just a week ago. Joining us now is Stephen Skanky. He is the chief economic advisor at Keel. Good to see you, Stephen.
It's good to be here, Alexis. Thank you.
First off, what are your thoughts on these predictions for GDP? Are they a little too pessimistic?
Well, both the New York and the Atlanta Fed seem a little bit too pessimistic. If you look out what some of the others are saying, I think Goldman Sachs is still forecasting 1.9%. Right. And the Atlanta and New York Fed have a history of underestimating growth, and then we get a positive surprise, which isn't all bad.
Perhaps that's their strategy.
That may be their strategy. It's sort of like over withholding on your income tax return, so you can get a refund when you file.
Do you think that we should believe that the U.S. consumer is going to remain resilient, though, into 2020? Because let's admit it, they've really been the power behind this engine as of late.
You're right. They have been the workhorse. Even when business investment as a component of GDP growth has been negative, it's been the consumer that has carried the weight. In the recent University of Michigan Consumer Sentiment Survey, it was interesting. Although it was up a bit, and it does remain high, not as high as it was, but it was up a bit. But almost spontaneously within the survey process, 25% of the survey respondents indicated concern about the tariff and trade tensions, which is sort of remarkable that consumers surveyed would be thinking about that, at least to that degree.
Yeah, especially because the tariffs haven't really hit their pocketbooks just quite yet.
Right.
Yeah. President Trump, by the way, tweeted that he's had a, quote, very good and cordial meeting with Fed Chair Jerome Powell. He wrote in part, everything was discussed, including interest rates, negative interest, low inflation, easing, dollar strength, its effect on manufacturing, trade with China, EU, others, etc. They covered a lot of ground, it sounds like, Stephen. Does that sound like a truce to you? Because we know he has publicly lambasted Powell.
Well, I can't imagine that it's a real truce unless Chairman Powell just capitulated and said that he'd do what the president, whatever the president wanted. Give him negative rates, which is what he keeps saying exactly.
he wants.
But, you know, the president was very much aware of what Chairman Powell said last week when he testified in his semi-annual report to Congress. And he said good things about the U.S. economy and really talked down notions of any further rate cut this year or in the foreseeable future unless there was some dramatic change in economic data, which until now there has not been. So it was a good opportunity for Chairman Powell to tell the president just some basic facts of life, I guess, hopefully in an environment where he was able to listen and hear them.
What are your predictions for economic growth next year?
I think we'll average about 2%.
So that's higher than many are saying.
Yes, I think that if we get a resolution on a trade deal, and if we see a continuation of the quantitative easing in Europe, Japan, China, and so some increase in robustness of the global economy outside the United States, it could be a very nice result for the United States.
So you're pretty confident we're going to get some sort of a meaningful trade deal in the new year?
Yes, it's so important for the president's calculus in having an economy that bodes well for his reelection. And at the end of the day, he's laser focused on that. And so what happens with the stock market and what happens with the economy is very important to him. And I think he gets it, or at least his advisors get it, that the Fed can't engineer that if we continue to have a drag as a result of tariffs and trade uncertainty.
All right, Stephen Skanke, thanks as always. Good to see you.
Thank you. Good to be here.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.